Hello, this is Brandon from Galaxy Stock Market. Today is May 16th, 2026. It's Saturday. It's about 8:35 a.m. Eastern Standard Time as I bring you this markets look ahead for the week ending next week on May 22nd, 2026. A lot has happened. A lot of people are a little jumpy about the way the monthly options expiration ended on Friday. But we've been warning about that volatility on Friday, wide swings in prices, and our community did fantastically well. We just sidestepped that massive volatility that occurred on Friday. The question is that a sign of a market trend change? Definitely, we need to look at that action as potentially the stock markets being at crossroads at this point. The bull and bear battle is about to start. And, this is a difficult market. I know a lot of the bearish people have been just taking it up the chin. And this is a market that is climbing the wall of worry. And I believe that it will continue to be so with significant volatility along the way. So without further ado, let's get started. And what I think about what's going to happen, I still think we're climbing the wall of worry. And macroeconomically, I am very, very bearish. Okay, and we'll go over that. But you have to follow where the big boys or the dealers are positioned. Otherwise, you're going to be frustrated shorting every tops and shorting every bottoms, and it's just not the way this market works. And I hopefully this will help, especially those that are following me on YouTube and X.com and not part of my community. Give you an insight into my line of reasoning and why we are actually thriving and being successful in our community. Okay, so let's get right to it. All right, so here is the disclaimer. Pause it and read it if you're following me on X.com and in YouTube. And if you agree, please move forward. And of course, thank you everybody for following us on x.com/galaxy.market. Lately, I've been a little political and commentating. Sometimes I can't keep my mouth shut, but a lot of great information about my insights that I think I should share with the world. In terms of economy and the stock market, cryptos, and everything else in between, gold and silver. And please like us, comment, and follow us on youtube.com, right? We have a YouTube channel, believe it or not. All right, so here is the canary in the coal mine. Is it really a canary in the coal mine? Sometimes rats jump ship right before the sinking, and there's no bigger rat than Bill Gates, who is trying to push basically meatless society and lab engineered meats, virus vaccines that mysteriously appear. Usually vaccines take 9 to 10 years to bring to the market, but he seems to have a solution for everything. And uncannily, he seems to know when the next quote unquote pandemic, or shall I say plandemic, is happening. All right. If you guys want to see, just kind of how evil looks like, and this is Bill Gates right here. Okay. And that's my opinion. But this guy has sold Bill Gates Foundation, and along with Melinda Gates, and, I'm not going to commentate on that, has sold their entire position. So that means that Bill Gates, the founder of Microsoft, along with Paul Allen, is no longer has any ownership stake in Microsoft Corporation. And so the question is was it this sell-off on Friday a resultant effect of Bill Gates dumping all of his shares in panic? If that is, then he must know something, and that must be the canary in the coal mine. Or was this just a bunch of delta hedging activities as a result of options expiration on Friday? But this is the canary in the coal mine. Right? Usually the rats will jump ship right before the ship sinks. Okay? And so pay attention to this. It doesn't have to be. It's just an awareness thing. Okay? And then, of course, the other canary in the coal mine last week, if you are living under a rock, the Senate has confirmed and pushed forward the Clarity Act as it stands, and basically bringing in a potential and of a digital currency. and a new monetary system. And it is now set for full Senate voting, which will then go to President's desk for signing. Guys, a lot of these wars and rumors of wars and this, speculations about the problems in our, the banking system and the stock market, being too high and all of this other stuff, the pandemics and the hantaviruses of the world. And now they're talking about Ebola because no one's really buying the hantavirus scheme. And Ebola is the same way. They want to scare you and make you pay attention to that aspect while they bring in a new monetary system, because the fractional reserve banking system has run its course. They have hyperinflated as much as they can, and the bankers need a distraction, something to blame it on, and on why the economy collapsed so that they could bring in a new monetary system. Okay, and so this is the other canary in the coal mine that you need to pay attention to, is that Clarity Act has passed, and I do expect continued volatility. However, I still maintain the fact, and I will show you my technical analysis and charts that I'm going to show you, and we'll look at how the dealers are positioned in the gamma exposure and delta exposure and hedging activities to kind of glean a sense of what's going to happen going on next week in May 22nd. That's Friday, that expires. So this is for that week. But canary in the coal mine nonetheless, Clarity Act has passed, paving the way for digital currency and digital stable coins and distributed ledger systems to permeate the banking system. Okay, and as well as whether you could use staking of certain cryptocurrencies like stable coins and earn yield that you can't earn in the banks, right? And this is the whole problem. The banks will take money from you and charge you monthly fee to have the privilege, for most of us, to conduct checking activities, but they don't pay you any interest. But they will lend you that dollar that they took in. For every dollar they take in, they can lend out $10 or more. In this case, with all the derivatives, probably for every dollar that they have deposit, they're probably lending out $1,000 that doesn't exist. And they charge you exorbitant interest. And that's where the battle is. They don't want the stable coins or the cryptocurrencies to compete with the fractional reserve banking system. But like I said, this is the end of the fractional reserve banking system and a new digital currencies backed by stable coins and gold and silver and any other tokenizable tangible assets. And that's coming. And it's a good thing for the public, probably a bad thing for all the banksters. But anyways, I digress, and let's move forward. So that is a canary in the coal mine, right? So then the question is a banking crisis about to unfold? And I've been saying this a long time that most banks, in fact, all of them, I believe, including the central banks, are insolvent. And this is why you have wars and rumors of wars, why you have threats of pandemics and the viruses that you have or never have heard before. I think everyone's heard about hantavirus. By the way, hantavirus is not a respiratory virus, and they're trying to scare you into submission, into surveillance, into locking you down, into getting that mRNA jab, which you should not be getting, which is poison, folks. It is designed to create you into something called chimera. A chimera is when a different gene is inserted into your original gene to gain a function of certain aspects. In this case, if you look at all of these sudden death syndromes around the world that's happening, that's exactly what's happening, okay? It is because those of you who got jabbed more than like 2 or 3 times or even once, I mean, it's like it doesn't even matter. If that mRNA vaccine is inserted into your genome, you're going to have problems. But they can explain it away. They can say, well, it's because he died of aneurysm, because he died of heart attack or congestive heart failure. Oh, he got cancer. There's nothing you can do about it. But this mRNA vaccine reduces your immunity. And go look it up. It's called VAIDS, right? Okay, vaccine-acquired immunodeficiency syndrome. Okay, if you really think about it, and you can do your own research, and I've done mine, is basically what is COVID? COVID is a SARS virus, right? Connected to a HIV promoter region. Okay, you heard it here first, or maybe not first, but everybody knows that now. Okay, well, not everybody, but that's what they're pushing on you, and that's what they're going to continue to push on you, to weaken your immune system, to continue to create turbo cancers, to create cardiovascular anomalies going forward. All right, so is a banking crisis about to occur? I mean, well, it's not about, it's been occurring, right? It's just that under Jerome Powell, they've been opening up discount windows, printing money to oblivion to basically provide liquidity to the banks. And this is what the stable coins will do. This, especially the XRP. You know, I'm a big fan of XRP. I've been pounding the table on that for the greater part of last 8 years, at least, on XRP. XRP is the digital rails. It will be the new digital reserve currency. It will also be basically utilized for all tokenization of assets, cross-border payments, yada, yada, yada. But regardless, here is that, we had yesterday on Friday, we had a massive gap up higher on the news of Jerome Powell stepping down. He's not going away, though. Okay, and I don't see how this is legal even. That he's going to step in as a governor. What does he have to hide, right? To oversee wars or undermine? I don't know what kind of power he has. He should go quietly. He is one of the worst Federal Reserve Bank presidents, chairman known to mankind. Okay, the guy was incompetent. He basically was a yes man for the deep state banking cabal. Okay, and printing money to oblivion. But regardless, all right. Just don't get me started about Powell. The foul Powell is gone, but not really gone. The only way he's going to be gone is when they indict him on banking fraud at the Federal Reserve level, and that's what they're trying to hide right now. Okay, so I'm not going to go into that. I did, but I'm not going to go any further. It will drive me insane talking about it. But regardless, what we have is a situation where this 10-year yield, as measured by TNX right here, okay, guys, you guys need to have this on your watch list, those that are following me on X.com and YouTube. Follow this, because rising 10-year yield, that's what this measures. If this goes higher, it means they're selling our bonds, U.S. Treasury bonds. And really, as the world sells their U.S. Treasury bonds, guess what all your banks, including Federal Reserve Bank and all your national and regional and, community, as well as the entire global banking system holds? What do they hold? They hold the 10-year Treasury. Okay, the higher this yield goes, it means that whatever asset they're holding, okay, which they're not marking to market, they're pretending that it doesn't really exist, that they're fine, right? That's why they have to keep tapping the discount window and continue to need bailouts that you don't know about. We've been having quantitative easing to oblivion forever, even though they're talking about raising interest rates. The only thing that raising interest rates to save this economy hurts is the consumers, you. Okay, because everything gets more expensive to borrow. It doesn't do anything in terms of raising rates to save the bond market. It doesn't help us, the average common people. But this rise in rates, it means that their assets are basically zero. In fact, this would need to fall all the way down into 35.6 to even have a conversation about recovery. Okay, and this is the dilemma, right? And the fact that we gapped higher on Monday, not Monday, Friday. I'm sorry. I'm thinking about Monday. We're almost the fact that we're even above 36.5 on the 10-year yield is absolutely crazy. Just move the decimal over. All right. So whatever you think the Fed has power to do, they do not. They are just a mouthpiece, and they are basically obsolete and unnecessary. I always say end the Fed, and this is the reason why, because they were hyperinflating assets, transferring wealth to the 0.01% elites. Okay. And those of you struggling, you understand why now that's happening. But this is the canary in the coal mine, right? This is the macroeconomic picture that I've been very, very, very worried about. But then you might say, but you've been relatively bullish since the middle of March, right? Yeah, we nailed the bottom there, and we've been trading in and out into the bullish side. But now I'm cautiously optimistic. I have been. I have one eye open. Okay, do I want to be long in this market? No, but is the market forcing me to be long? Yes, right? But now I'm saying is that we got to have one eye open and be open to the fact that the market may continue to wobble as we climb the wall of worry. Okay, that's all I'm saying. Watch the 10-year yield. I mean, we are now at critical and dangerous levels right now. So this is what I mentioned on Friday, May 15th, yesterday. I said this. I said, hey, look, you know what? There's a significant banking and debt system. And in the morning, it was at 44.61. As you know, it's almost at 46 in one day. Okay. The fact that this is moving like it's freaking Tesla of old. Okay. This is crazy. Okay. I said just keep an eye on it. The overall trend is bullish with divergences continuing to build in the stock market. So we're monitoring. But we're going to follow the dealer positioning in price and gamma, not price to volume. If you follow price to volume or any type of regular price to volume action, you're going to get killed in this market. It's just an awareness thing. The US dollar is also rising in addition to the 10-year yield, right? Which is a bad thing, folks. It's a bearish and indicative of major financial stress. And so we're vigilant and watching. That's all we were doing, okay? In fact, we got out of most of our ES positions on Thursday, right? In fact, all of them. I was pounding the table. For those of you in my group that haven't sold, then, oh well. I mean, that's the whole issue, right? Overall, I think we're going to continue to climb the wall of worry until it doesn't. And we will know. We will let the markets tell us. We're not going to guess. We're not in the business of guessing. We are in the business of seeing what the big boys are doing. It doesn't matter how fraudulent they are because they set the market tone. It doesn't matter how right we are macroeconomically. I mean, I think there's a X.com post by somebody. I'm not going to name names, but, you know. They're almost militant about shorting the market. It ends here today. Been saying that for the last 3 or 4 weeks. Getting killed. I don't even want to look at their P&L at this point. And no, I don't want to. I don't care. All right. Here's the thing on May 15th, the options expiration day. This is exactly where we ended. And you can see how beautifully understanding gamma exposure and delta exposure. I mean, we knew that it would get pinned. And I'm going to show you exactly what we talked about in the group. All right. So people are going to see this on Friday. Oh my gosh, the net drift on the puts is much higher. We're exceeding way into the stratospheric levels, and so, the market crash must occur, right? And here's another example of how beautifully the market makers pin options expiration pricing, right? It made everybody believe we're going to go hit that, 7,600, 7,550. 7,500. This is SPX, by the way. Okay, ES is just a derivative. SPX is the real deal. Okay, folks. And of course, basically, we had the most valuable contract right at the 74.05 on the SPX, and we finished right above there. And then you can see how they're basically creating a kind of a strangle so that the price doesn't move higher. And so we saw this coming, and we talked about it at length in our group. And so this is what I mentioned. Okay, so this was 19 hours ago. And basically what I said was, hey, ES is rejecting and chopping near the 74.62 level. Okay, that's ES. I'm not talking about SPX. SPX is about 25 to 50 points lower than this. Okay, so it's consistent with SPX 7450 and 7400 acting as support and resistance, right? Resistance here and support. And so we saw that, and I said most valuable contract on SPX is 7400 or ES 7425 today. And we finished right around there, right? 7418, 7420. Good enough for government work. That's the options pin, okay? So you have to understand what the dealers are doing, not what you think you want to do. And generally on monthly's options expiration, you need to be out of that market by 10:30 a.m. Eastern Standard Time, or you're going to get killed on basically the theta decay and the IV crush that occurs, especially if you're playing with zero-day options. We warned about this volatility for Friday. I knew this was coming. Okay, so what does it look like? So despite the Friday's options expiration related repricing or the price pullback, which looks like the market is going to crash, right? But May 22nd, next week expiration, right? We're looking at the May 22nd SPX. It tells a different story. And what that story tells me is that, hey, look, at 7,500, it's still the MVC. Yes, we have a little bit of negative gamma exposure at 7,300. Are we actually going to go there? Probably not, but this is what's being set up right now. So a little bit about the gamma exposure, or the most valuable contract, generally tends to act as a magnet pulling price eventually by May 22nd. Now the dealers are not going to position for May 22nd to happen on May 22nd. This is where there's most amount of hedging activity and derivative activity. Okay, right here at the 7,500 or 75.25 to 75.50 on the ES. Okay. Now, if everything melted down, then probably the way the negative gamma would work is that it would work down into the 7,300, maybe 73.25, 73.50. That is highly unlikely, but this is basically the positioning in which that the market makers are taking. You have to look at this most valuable contract and make your own decisions. The other thing is, yes, we're below the zero mark. Okay, so the trend is a little bit negative, partly because the way things are being positioned. However, the call activity is above the put premiums. So that's something that you need to look at. This was on the May 15th. So this is for all the way down here. This is for Friday expiration. So we do see a lot of, not a lot, but enough of these negative gamma exposures. Okay, so it looks very, very terrible. Okay, at this point in the heat map section. Okay, so it's an awareness thing. Okay, it just means that we're going to have a lot of volatility, a lot of chop back and forth. However, we have to pay attention to this most valuable contract. When we look at the interval map, you can see a different story. This is as of May 15th, Friday's close. Looking ahead into May 22nd, we see the most valuable contract at 7,500. And if graphically you can see, as long as we can get above this level, it doesn't mean it's going to go up in a straight line. Okay, everybody thinks we're going to crash the hell out on Monday, and which we may. If we do, then we're ready for it. We'll know by the way everybody's hedging intraday on May 18th. Okay, but we got to get over this little bit of a void here. Okay, so in order for this to move higher, okay, this is the MVC. It acts like a magnet, right? There's really not a lot of negative gamma that's being formed. We have some 7,600s being formed for Friday next week, May 22nd. But this is where the price will most likely gravitate eventually, okay? And so the question is are we going to crash? I don't think we're going to crash. I do not think there's a crash coming, but if we do on Monday, I'll change my mind, okay? We just follow where the money goes, okay? So that's telling us the different story. All right, so let's look at something else, okay? So what we have is a new money system it's got cut off, is almost implemented. Expect volatility towards the end of this week and into June. And my cycle analysis, which I'm not going to go over, it's too involved, basically says that we're probably going to have a steep corrective wave, maybe starting the last week of May into the second week of June. And we may have some volatility going into July and probably a good part of August, and then we'll probably bounce again. Okay, I'll let you know more on that, but that's kind of what I'm looking at this point. Okay, so yes, for those of you looking at it, yes, I use the Quant Data as my service provider, and they're fantastic. Okay, so let's look at Monday. Okay, Monday there is some headwinds, right? I mean, we have the MVC going down into the 7,300, so I think Monday's going to be pretty choppy. But how many times have you seen this? We get this massive sell-off in the morning and then massive recovery towards the end of the day or on Tuesday. And I believe that's probably what's going to happen as long as we basically work off these gammas. As you can tell, as I talked about, May 22nd is bullish. Okay, so we have all of these areas and everybody thinks we're going to crash. Okay, but when we look at May 18th, we still have, yes, we're below the zero. I know the market is under pressure, but if you look at the net drift, we have the calls above the puts, and really we had some recovery coming in terms of the volume as well. Okay, so the question is are we going to go down into this 3750? We may. On Sunday night we may go down there, and the question is, can we get above the 7450 on the SPX? Okay, there's not a lot of action right now, and this is just a closing price level as of May 15th, looking ahead into the positioning on May 18th. And these will change. Okay, this could end up being super bullish. Okay, what I do know is that there is a likelihood that we're going to finish around this level right here, 7460 on the SPX, which is like 74, 75, 74, 75.10. Okay, so that's something to look out for. All right, and so this is kind of the things that we look into. Okay, so let's go into my trusted McClellan submission index. I've been saying for a couple of weeks, McClellan submission index about for the last 3 weeks has rolled over. So this needs to be paid attention to, but markets are going to do what they're going to do based on dealer hedging. Okay, dealer price action. Okay, everything is negative. We should have a massive pullback coming soon. It's a warning sign. It doesn't have to happen tomorrow. It's something that we're aware of. Okay, market has been significantly resilient, but my McClellan summation index on the SPX is my leading market directional indicator. Okay, so we've been going parabolic up higher and we took advantage of that, but now we're at crossroads. We have to be aware that the markets can roll over at any minute or any day. It could take a week, but we're understanding that the McClellan summation index is now net negative and bearish. Okay, SPX, what are we looking at on the SPX? Okay, SPY, I mean, sorry, not SPX. Doesn't look too bearish to me. I know that we're rejecting off of this R1. I mean, if you look at it, RSI is positive. This is just right now, we're going to chalk this off to being Friday options expiration shenanigans, right? Nothing wrong with this chart right now. Okay. Let's go look at, this is for the weekly, but let's look at the day, monthly. This is the uptrend, right? This is my long-term uptrend line. We broke above there. It doesn't look too bearish to me right now until further notice. I think we are at crossroads. So if we poke below here, you're going to see me get really, really bearish. Okay. Let's look at silver. Everyone's saying, oh my God, silver pulled back. It rejected. It basically reacted to the market action on Friday, folks. Okay. We're going to move higher. Okay. This is a buying opportunity and we have positive divergences going on right now. Okay, and so that's that. Gold's the same thing. By the way, silver's been leading gold in price. Okay, same thing. Oh, it's so bearish. We got this, candle. But remember, we bottomed here in this area right here. We bottomed, right? And yeah, we get a little pullback. That's fine. We're going to test back and we're going to go higher. We still have positive divergences here. Okay, MACD has been negative, and we're going to work off that negative MACD shortly. Okay, XLF, pay attention, folks. Stress is in the banking system. Okay, XLF, on the other hand, rejected off the 50-day moving average, broke down below this triangle. We're right into this area. If we break below this pivot level, we're going to 46.3, probably go all the way down to this 46.51 level. Okay, negative divergences galore. There's negative divergences everywhere, and PPO ADX is beginning to form. My crush indicator, this bearish formation, it's forming. Pay attention to banks, folks. The other one that I'm beginning to get bearish on is Amazon. Okay, Amazon is peaked, no doubt about it. Has been bullish as heck, but you know what? Now we're beginning to get a lower price action off of the top end of the Bollinger Band. Okay, we have MACD that's basically forming negative histograms at the top. These are the things that you want to short. If you want to take a shot at it, do I recommend shorting in this market right now? No, but this may be the top for Amazon. We got stochastics rolling over. Okay, so this is going to be one of our top short candidates for next week, along with some of the banks. Okay, and pay attention to BKNG and some of those things that are out there. Yeah, but PPO ADX is forming a negative formation already here, beginning to roll over, do this. That type of a situation, when that forms fully, so I expect this to start rolling over. Start rolling over. If it does that, that is negative. Okay. Amazon. Okay. So also on my trusty crush indicator, okay, on Amazon. Oh, I'm showing you on my current watch list. It's okay. Okay. Guess what? My algorithm has a sell indicator. All right. Can't get any easier than that on Amazon, folks. And that's all I'm going to share with you all. Okay. And then we'll talk about it more in our community. BKNG. I mean, was one of our top short candidates. Here's our bearish, right? BKNG at the top. Okay. And yeah, that's what we're looking at, and it basically fell down. If it breaks this 149, folks, we're going all the way down into this 105 level in the next couple of weeks on BKNG. Super bearish on it. I am bullish on Service now, however. I think it's finding a bottom. We've been talking about that, and in fact, Service now has just entered, and we have positions on these, and I believe we're going to go higher. Even if the market gets a little wonky, yeah, then we'll probably chop around. But overall, we're going higher on Service now. Okay, Adobe. Adobe's the other one that I think is a good bottom formation. We're making lower highs. We finished just under that ADMA because of the Friday market close. Yes, everything looks bearish right now, but this is what it looks like at the bottom. Okay. However, MACD is telling us a different story at the bottom, that it is gaining momentum and people are buying. These are the ones you want to go long on, folks. So this is what we've got. All right. And so stochastic is positive. Our PPO ADX, okay, is forming what I call the bullish crush. This is the crush when it does this. Okay, that's the crush, folks. Yes, accumulation distribution looks like dog crap, but it is beginning to recover. Okay, it is so hated that it's bullish, folks. Okay, and then of course Tesla. Okay, Tesla needs watching. There is a SpaceX IPO plan for June now. Okay, and that looks like a reversal candle. We will be watching. I'm still bullish on Tesla, but if this reversal candle, now we have to pay attention to it, right? But there's really nothing here that tells me that that's just a little blip and it's just a buying opportunity. We have MACD, we have the bullish cross, CCI is positive. Okay, and then when we go look, I mean, it's just there's nothing wrong with this stock. Okay, in fact, Tesla is going to break out. We have long positions on these. We have this crush indicator. Remember what I said about those? Okay, now it's a smaller crush, so can it roll over and do that for a while? Maybe. That's what we're going to watch it. But if you're playing with options, you need more time for this. Okay, so I just want to end with XRP on this little price pullbacks that we had. And here's XRP and all the cryptos. You got to get them when no one wants them, folks. Okay, XRP is the real deal. It's the one, okay? Money system changes happening. XRP is going to play a critical role. And don't be these guys waiting in line to buy it at $1,000, okay? So in the coming week, markets are at crossroads. I think there's going to be some volatility on Monday, okay? But I still believe that we're going to have again, another set of recovery, and all the bears are going to be pulling their hairs out. But you can. This is something that's tradable, or you can basically wait for the pullback and then go long. We're climbing the wall of worry. Market's not going to basically crash yet. That should come towards the end of May for the second week of June. Okay, great reset is coming right now. Okay, markets at crossroads. Volatility expansion is coming on Monday. Watch the banks. Monetary system reset is happening. So what we're watching is Bill Gates selling all of his Microsoft position, a canary in the coal mine, or is it something else? Silver and gold, watch carefully. Buy the pullbacks, right? Buy any pullbacks. Crypto's moving higher. Buy any pullbacks. Markets are climbing the wall of worry, but reaching crossroads. So it's an awareness thing. We have finished the middle of May. So the last 2 weeks to the first 2 weeks of June is going to be something that I'm looking for a significant correction that we could switch our bias from cautiously bullish to bearish, but not yet. Okay, we need more data, right? We're watching Tesla. okay, on the upside. Amazon, however, is a sell, folks. You do your own due diligence. I'm looking to short JP Morgan Chase, Adobe and Now, ServiceNow, Adobe. Those are my favorite right now on the long side. Um, and XLF. XLF is negative. You can short those if you want to. I mean, I'm not financial advice. I mean, you need to do your own due diligence. Stocks expect volatility on Monday, but 522 Friday gamma positioning and exposure has MVC at 7,500 SPX. So you go do the math. We're climbing the wall of worry, folks. So thank you so much for watching. Follow me at Galaxy.Market and like us, share, and subscribe and comment at YouTube. And, if you want to work with me any way, shape, or form, you got to email me at coachbrandon@protonmail.com, including questions about our membership in our community. You can join our Essentials, a basic level, not so basic, but it is basic level, $49 a month. You get our watch list, market commentary as fit, get these videos early. Charts, anything. And once in a while, I'll set some trades that we are doing in the elite group. That's my mentorship group. And if anything about those you want to inquire, go visit my website and find out more, or email me. Okay. Otherwise, be careful out there. It's going to get a little rocky the first half of this next week. But I think we're still climbing the wall of worry, but the markets are coming at a crossroads, and towards the end of May, I think there's going to be a significant opportunities for you bears out there to partake, but then it's going to be short-lived. By the probably middle of August, I think we're going to have a rip your face off rally, but the real crash is not going to come until November, folks. Just FYI, okay? All right, so that's it. Bye-bye.